And we're live. Welcome back, everybody. Catcher Radio, back again. So we're going to get back into coding here in a little bit, but before then, let's try to answer the question, is the bottom in? That's kind of the question that's on everybody's mind. It's been a brutal, now 2-year downtrend. About 2 years ago exactly was like peak euphoric top. And it's been down only since then. So let's try to answer these questions, try to see what's going on, and get a sense for what the future holds. Let's see what people in the chat have to say. Chat, is the bottom in? What do you think? Let me know. Let's take a look at the charts. I guess that's where we should start. Let's get some music going. Let me know if this is too loud in the music. Let's post a tweet. King Anon commenting on the Twitter saying, turn the mic up. I don't even know how to do that. Let's see. Can you hear me now? Is the crypto bear market bottom in? I'm going to ask this in a poll on Twitter right now. Yes. No. I'm going to do a day-long poll. Maybe 3 days. Let's see what people have to say. Two negative says Mike is fine. Arome, what's up? Is that I'm looking at your profile picture. Is that the screenshot from Steak Wrap with the little line going up? What's actually pretty interesting is that one of my first YouTube videos ever, I tried to ask the question of how to know the top is in. And kind of the premise of that was looking for signs of trend reversal, where the buyers have run out of energy and then sellers have taken their place. And there's really no difference between the top and the bottom, because the price charts are just the ratio relative to the two assets relative to each other. And so the top of one asset is the bottom of the other. Like with Bitcoin versus dollars, it's like, the top was 69,000 or whatever if you're measuring in Bitcoin, but if you're measuring in dollars, the bottom was 1/69,000. And so it's a similar phenomena of kind of identifying tops and bottoms. There's some things you can look at on the price chart which tell you part of the story, but the price chart only tells you what has happened to date, and it's like a reflection of what happens after the fact. And then there's things that aren't captured in the price chart that are just as important. And then the sum of all these different forces that are impacting the decisions that buyers and sellers and holders are making, that's really just establishes the price. So, you can never get a single answer just by looking at a chart. But it's always a good place to start looking, because you do get a lot of really good information. So why don't we pull up TradingView? I mean, another thing to keep in mind is that there's always a bull market somewhere, right? Like it's like there's kind of these like general macro crypto bull markets that kind of stem from Bitcoin and Ethereum. But now, it's like been painful bear market, but even in the Pulse chain ecosystem, there's been this bull market of these like higher risk assets, which actually brings me to a point that I was talking to, just like in real life friend of mine, somebody who's not really plugged into all this stuff, not really into crypto at all. And what I was describing to them was that during the crypto market cycles, there are 2 times when just like stupid, absurd stuff is really popping off. It's at the tail end of a bull run and the tail end of a bear market. And you kind of see that with some of the NFT stuff and some of the ICOs. It's like the ICOs just got so crazy and stupid back at the tail end of the 2017 upcycle. And then at the tail end of the 2021 upcycle, and kind of the reason for that is that at the tail end of a macro crypto bull cycle, the kind of easy money gains are gone. Like just holding Bitcoin, like the gains from that were already gone. And so people that wanted to achieve those same gains, they had to move higher and higher up the risk profile. And so that's what kind of leads people to be just levering up the risk. It's if you're 2 years into a up only bull run, you're like, oh, everything's going up, everything will always go up. And so people are just willing to tolerate more and more risk. And they're trying to make up for the gains that they didn't get. And so that's kind of why you see things get kind of crazy at the top of cycles. But then a similar phenomena happens during the bear run, like the deep bear cycles. But it's not so much like you're trying to make up for having missed gains. It's more people are trying to make up for their losses, where they want to make it all back in one trade. And so they're willing to take more and more risk. And we've kind of been seeing that in the Pulse chain ecosystem with, kind of the, just things that during, other situations, may not be as attractive, but at this point, it's kind of like all rules thrown out the window. Kind of the things, like the ideas that people had really stuck really true to during the bull market, with like delayed gratification, not being day traders, like, only interacting with audited, secure contracts, like looking at fundamentals. All that's kind of been thrown out the window, and people are willing to lever up the risk. And so, which is, totally fine. Like, it's actually a good thing. I think sometimes people get upset about other people levering up the risk and like, buying coins that, may seem absurd, and buying into narratives that may seem absurd, but it's all just part of the game. And it's like everyone here is doing this entirely on their own free will. And so there's really no shame in participating in any type of asset in crypto. Like, everything's fair game. And I think the appetite for levering up the risk is really just, a phenomena that comes from people, especially with Pulse chain, particularly, where it took 2 years to launch, and then it launched and it was just kind of flat. And then after the whole lawsuit thing, basically like a 60% markdown across the board. People are wanting to make it back. A lot of old narratives that they may have latched onto just aren't really relevant, or they were proven wrong. I think there's been a big shift in the people in like the people that people are like looking towards for, kind of guidance on this stuff. It's a big shift. New people are experiencing gains. Old people who, like for instance, a lot of people that are really popular in the ecosystem, they kind of got popular by capturing the move on Hex from 10 cents to 50 cents, kind of clamoring about it, and, thought they were doing awesome. And then now it's like those people are down big, like 90% down. And so there's just a lot of a lot of change going on, and I think that things like that are signs of like the of capitulation and kind of that deep depression and the time of it. It's been 2 years of this, um, where like there's been 2 years of selling, and so by now, like how many more people are there to sell? But the thing is, there can always be more selling, like especially as price starts to inch back up. A lot of people I know are feeling like, kind of like it's like almost a worse thing that Hex ever went so high. Like had Hex otherwise just kind of like slowly churned up to where it is now, people would probably be feeling a lot better about what the price is right now. But because it went so high, it kind of set this like expectation, and maybe like people are showing their families their paper gains, they're feeling top of the world. I think in the movie, literally the thing from the movie, the Hex movie, that really stood out to me was the scene where RG3 calls his boss and says, "I'm the richest man you'll ever meet." And now, like, I wonder what just kind of the status of that conversation is now. So it's these are all just part of the cycles, and I think a lot of people are really going through these for the first time. I'd say this is my second full-on bear cycle. Because I got in during the 2017 bull cycle, and then experienced a brutal bear market from 2018, 2019. And so kind of that same 2-year period, it's kind of re-entered now. I'd say that what's a little bit different now is that just the whole world is different now. There's war going on. I mean, even though war really always is going on everywhere, there's like major wars happening, big shifting of power, big shifting of industry, very different financial markets with how the Federal Reserve has been acting. Everything's different. So, we really can't take a bull market for granted. Can't just, like everyone's like, oh, we'll just wait for the bull run. I don't think it's going to be that easy, because if everyone just thinks they're going to wait for the bull run and be rich, it probably isn't. Like it can't possibly turn out that way. And so I think that probably what the way it'll continue is that maybe crypto's kind of been on easy mode, and last couple cycles, maybe this cycle gets a lot tougher, where you can't just like blindly choose a token and it goes up. Like there may there are a lot of factors that are involved in it. It all boils down to supply and demand. It's like, how is the supply issued, who owns the supply, what's their situation, and then what's the narrative that drives incoming demand. And so those are all the things that we'll have to kind of work through when just kind of through this next cycle. Let's see what the chat has to say. Milson says, "Hi, Dippy." Why do people call me Dippy? That's so weird. What do you think about we going down to 8 to 10K BTC before the bull run? I don't know. I mean, honestly, Bitcoin's actually, I think, performed pretty well. I think part of it is because it even though like there, let me show the chart. Let me show what I'm looking at here. Like, it's like there's nothing about this bull cycle that like screams underperformance, but relative to Ethereum, which outperformed it in a big way, and like all the other things that people are investing in that outperformed it, like, and because it really only went from the prior all-time high to the new all-time high, it only went 254% higher compared to the prior bull run, where it went 1,500% higher. So that's like, it hit out at like say 1,000 to 20K. So, I mean, well, 15. So that's like 16x from peak to peak. And then this one was like only 3.5x. So, um, like all things considered, it kind of underperformed in the past cycle. And because it kind of underperformed, it doesn't have to fight through as much downward pressure. Like that's kind of the downside. Like when I look at the let's pull up the all-time hex chart, hex combined. And this is something that I think they will have to fight through because I mean this year was definitely the most bearish time in hex history. And then there were kind of some, I don't want to say self-inflicted, but things that kind of even caused further pressure on all this stuff. But like when we look at this, like hex massively overperformed everything, and it got to levels that are probably too high. Like, and now it's like all these levels we have to fight through on the way back up. Whereas like with Bitcoin, it like never got too shockingly high. Like the people that are most down right now, they are only down, like say you bought the Pico top of Bitcoin, you're only down 60%. Whereas if you bought the Pico top of Hex, even with your, because it's a combined chart. So like assuming you bought and held, so about 50 cents down to about 1 cent. So they're down 95%. And even though those numbers, 95 and 60, aren't very different, when measuring in percent down from the high, that's actually massive. It's like tens of X. So, because Bitcoin relatively underperformed last cycle, I actually don't see such that other kind of big leg down. It's like if Bitcoin had gotten to say like 100K, I would say it's actually more likely that it would do that because there would be that extra layer of top buyers who are now overhead, more levels to have to break through, steeper downtrend chart line, all those things. So I'm not really counting on like that 8K level. It always can. Because like no one here are like in the chat now are the people that have enough Bitcoin to sell to drop down to those levels. Like if Trace Mayer decided to sell, it could probably go lower than 8K. Or if the Winklevi twins decide to sell. I don't know. I mean, it could return because as of now, like we're looking for like kind of these signs of trend reversal. Like maybe you could consider this how it bottomed here if we're looking on this on a weekly chart. Let's zoom in a little closer. Like maybe you could consider this like a sign of trend reversal. This like kind of like big bottom, like another bottom here a little bit lower, and then it like yoinked back up, and then maybe kind of this like head and shoulder type of thing. Like maybe that's a sign of bottom. It's hard to tell too because like right here it's like that's like a major long-term like this like double top type of thing. You had that there, but there's nothing so clear. So I don't know if it would get that low. It always can. Like it's impossible to predict, but maybe it revisits this level here and then chops around and maybe, is on its way. And then that would be like kind of the inverse of this. And especially if it's like, kind of creates like some type of symmetry about that. Like whenever there's symmetry, that's an indicator that like, all the people that bought up here, they're like this first leg of sellers. All the people that bought here are like this. So like, these buyers up here turn into, this wave of sellers. These buyers up here turn into this wave of sellers. And so, you know, things like that can, if there's some type of symmetry, that's kind of a sign that like that full cycle is completed. But also at the same time, we have in July in Bitcoin, we have the halvening, which, the halvening so far has not been disproven as like a Bitcoin cycle thesis. And it makes a ton of sense why, because the inflation rate abruptly cuts in half. And so even though the inflation rate has nothing to do with demand, if suddenly the miners who are facing higher electricity prices now have less coins to sell, that's probably the biggest impact that it has. These large scale industrial miners, it's like they have to drive revenue. Their costs are in dollars, usually, depending on where they get their energy from, but their costs are usually in dollars, and they have to operate the equipment. And so now that a group who is typically an active seller is now has half the coins to sell with constant demand, then that can help alleviate some of the downtrend. And so, that next halvening I think is in like summer of 2024. And let's just take a look back at the prior halvening, which was in May of 2020. Let's get one of these guys. May of 2020. When was that? So yeah, the last halvening was like right around here. So we saw it like this whole thing, because also like the thing is like you can't just look at the charts and like, even though all buys and sells are valid, like the reason price was going up here was related to a Chinese Ponzi scheme. And like then there's this big sell-off related to COVID. So like kind of these one-off incidences, it's like, you can't fully kind of take it, but at least from the bottom until the halvening, the price was up, almost 3x. And say from here to the halvening, like an equivalent move from bottom to halvening let's measure that. So say from bottom to halvening, wrong one. Again, wrong one. One sec. So from bottom to halvening, it's like 200%, say. And so from here, from bottom to halvening, which is I think in like, what does it inch forward every year, every 4 years? So say it's in April of 2024. That would put a Bitcoin target of 46K at the halvening, which is kind of already on its way. But also like, say everything's just kind of scaled down, like from the last cycle, because when everyone knows about something, it's not going to happen as dramatically. So like now everyone knows about this. So like maybe since the last cycle was muted in a big way, maybe this cycle gets muted. So maybe let's put a prediction here. Let's say that that Bitcoin at the halvening, instead of that 200% repeat from bottom to halvening date, let's say that instead of that, let's say it's like 120%. So that would put, let's go even lower. Let's say 100%. So let's make a prediction here. Bitcoin price, I think, is going to be about 30, 31, 32K at the halvening. And what happens in between then, who knows? But I don't see 10K Bitcoin would be incredibly extreme. Yeah, but I mean, extreme things can happen. Like big things can change. Bought the top on the day. Bought the top hat on the day. Some said once you start taking screenshots of your portfolio, you start top. Yes. Where's my shirt? I have a shirt. It's in the laundry or something. I knew the top was in when I made a t-shirt with the hex price chart on it. And then as soon as I open the mail, I'm looking at it and I'm like, oh, this is what a top feels like, huh? So good thing I made those shirts. But the people that really knew the top was in were, well, here's my top signal. If a movie crew comes to interview you about your paper gains, the top is in. This is my first bear market and I took a hit with hex. When did you buy? Can't you just code it to always go up and to the right? Not really. Well, depends on what you're quoting it in. So, for instance, the look at deck screener, and let's look at base. Or here we just go to look into maxi. So, if you're quoting something in something else other than dollars, then you kind of can. So, for instance, like let's look at base right now. So let's zoom in here. How do we zoom in? I don't know why it's all blurry, but like base, for instance, it's backed by hex and it's always increasing the amount of hex it has. And so the price does kind of ratchet up into the right forever. But like for something to always go up in the right, like maybe you could construct a chart that goes up into the right, but maybe that only happens because everyone's balance is dwindling. And so maybe the price chart is always inching up into the right, but as a result, everyone's balance is just going down, including the liquidity pool, which would cause the price to go up to the right. So you can't really just like expect it. Like you need buyers. And then it's like, okay, if it's always going up into the right, like what is, like, that means that you can't realize any gains. And then what's the point? Patch simulation. Sorry, don't like, no, I don't care. You can call me whatever you want. Hurts. You calling us poor? Win green dillies. Nice having is estimated to be April 25th. Yeah, so we shall see. Let's look at Ethereum. Honestly, like I used to think about like broad crypto as Bitcoin, but I'd say Ethereum is probably more relevant now, and I think that's because of DeFi. It's like all the DeFi is happening on Ethereum, and whereas like Bitcoin itself, it's like just one asset class. Like an Ethereum is kind of a, I don't want to say index because it's not, but it's kind of a representation of like a whole financial ecosystem, and it's the biggest one in the world. So, like this is kind of what I see. We're kind of in this, just generally like there's a trend, kind of up and to the right. Let's see what Ethereum went from peak to peak. I mean, kind of interesting enough, like, and this is, I think, bullish for Ethereum, is that from peak of 2017 to 2021, it really didn't go that much higher. Like, it didn't go shockingly higher to where, like, it created all this overhead. And it's like, the Ethereum kind of bottomed out here at the, oh, you can't even see what I'm saying. Ethereum kind of bottomed out here at the, like at the previous all-time high level. And so like that can be kind of some type of support level. Because like even if you bought the peak on top of this and you held through the bear and then through the bull, and now it's like you're still break even. So there's not any like leftover sell pressure from this category of people. And the price is down from the highs. Let's see what from high to current range, about 67%. So that's pretty substantial. And, so let's count these little waves up here. Let's see. So say there's like three kind of major waves, like 1, 2, 3, if you want to call it that. So like this group of buyers, so these top buyers, maybe they were like some of the active sellers there. These top buyers, maybe here, and then this last wave has kind of been going on here. So like, you know, that at least that category is kind of being flushed out now. More so here than on the Bitcoin chart, you're seeing kind of clear like times where sellers run out of energy. And then kind of this like rising pattern here, rising in both directions. So I'd say Ethereum is kind of looking, it hasn't had like strong, like what you want to see when it's like actually in bullish land is for, let me just draw it out here so I can show you what I'm talking about. You want the shape of the chart to look like, to have positive curvature. So positive meaning like going like that, not like that. It's like, for instance, like you want the, like if like a bullish trend is characterized by the general shape of the chart looking more like that, as opposed to like even on like a same move, say it went like this. That's very different market momentum. You see like how this one is like kind of increasing, it's going up at an increasing rate, whereas this one is going up at a decreasing rate. Like bear markets look like that, and in both directions. So like here, let's draw these out. So bull markets look like that, and they look like, so what would that be? It would be like, so these are like the bull market shapes. So retraces in bull markets look like that. Bear markets look like that. So upwards momentum in bear market looks like that, and then downwards momentum in bull markets look like this. So you want the up cycles in a bull market on a smaller time frame to look like that, and you want the retraces to look like that. And you know, and kind of in bear markets, this is what they look like. So just a little rule of thumb. Looking to Maxi is an awesome site. Yeah, it's literally the best website anyone's made, better than any site I've made related to the pools. Very happy about it. Desi discount is juicy. Oh yeah, so I tweeted about this yesterday. Let's pull it up. I guess I can just pull up the. Okay, let's zoom in a little bit. So, like one way to think about these stake pools is that, like by buying one of these stake pools, it's with Hex, it's equivalent to just staking your Hex until the end of the stake. And so the way I like to look at the value captured in the stake pool tokens is that is like, what is the APY that you are experiencing? So for example, the like with Hex and Deci, so like on eHex, you can buy like the price is 0.84 Hex per Deci, and on Pulse Chain it's actually 0.7, and so that comes out to like 15% discount on Ethereum and 30% discount on Pulse Chain. And so if you're buying Deci right now, because it's a year old, the stake started 367 days ago. So buying Deci right now is like staking Hex for 9 years. But buying it at a discount means that you're getting more. It's like you're converting 1 Hex into 1.3 Hex principal because you're buying it at a discount. And your stake is earning at the share rate that was locked in a year ago. And I think by now it's up like the share rate has increased about 20% in that time. So, um, so like that means three things. One, it's like you're getting more hex principal than hex you're depositing. Two, you're earning at that higher rate that new stakers are not earning at. And you're achieving that 10, it's like you're achieving not only like a lower share rate, but because there's 9 years left, 9 years wouldn't have got the max longer pays better like the 10-year stake did. And so it's like, all in all, it's like there are three different things that are gassing up your APY. And so while like right now, if you were to start a 10-year stake, you would be earning about 29% APY, which can creep up over time as the payouts increase relative to share rate or share participation. But like right now, with assuming that the daily payout per T share just remains constant, which is a totally fine assumption to make, because what that suggests is that that stake participation goes up at a rate that's equal to the rate that the share rate is changing and the supply is changing. So there's kind of like a sweet spot that would cause the daily payout per T-shirt to remain constant. So that's like and it's right in the middle of all the possible outcomes. So it's actually a totally fine estimate moving forward. So like with that assumption, the effective APY that a DESI buyer is getting is 50 on Pulse Chain is 51.68%. And on Ethereum, it's 42. So that's much higher than what you could get just staking on your own. So like buying these tokens at a discount is it's like just like a superpower stake. And so someone else asks, why is DESI discounted all the time? And there's a couple reasons why. So let's look at this. Let's refresh this so we can get it all updated. Okay, so and something that you can see across the board is so Maxi is a different category because kind of the Maxi supply was swallowed up through the team launch, and it was like an entirely different audience than what DESI was. So like Maxi doesn't necessarily apply in the same way, but when you look at this, it's like DESI. We're looking at Ethereum, but it's similar on both chains. Well, actually, let's look at there's more trading on Pulse Chain, so let's just look at Pulse Chain. So like DESI right now, big discount, 30%. Lucky has about what would that be? So relative to its net asset value, it's at like, just under it's at like a 10% discount to its underlying value. Trio is very small, and Base is like right on it because the Base stake ends in 2 days. So you see it's like an inverted yield curve. Oh, you guys aren't even looking at my screen. So here's what I was showing. Big discount on DESI, smaller discount on Lucky, even smaller on Trio, and like no discount on Base. So that's called an inverted yield curve. So let's look at inverted yield curve. So this says inverted yield curve occurs when short-term debt instruments have higher yields than long-term instruments of the same credit risk profile. So while the yield itself is different, like usually they call the yield like the price. So like it's kind of like where the price that you're getting on the longer ones is shorter than the short ones. And the reason why that is a couple things. One is because like with Base, for instance, there's not really much room for big discount because it's always redeemable in a year. And so like selling your Base at a big discount, it's not really sustainable because like it's going to be redeemable in a short period of time. And so someone can like step in and make that short-term, relatively short-term trade and just lock in like, really high gains. And so there's, nothing that really pushes it down much. And whereas with DESI, it's redeemable in 10 years. So like there's price can always go lower too. And so that, like with Desi, because it's redeemable in so long, there's not like as much urgency to buy it as there is like buying discounted base. Um, and also one thing to consider is that had you staked for 10 years on your own, your early end stake penalty 1 year in would be a full nuke on the stake. So even getting 70% on your hex, it's actually a good deal compared to what you would have got early in staking. So a couple of those things kind of factor into it. I think it's like kind of also just general bearishness in hex. It's like if the ecosystem is bearish on hex itself, then of course it's going to be bearish on 10-year staked hex. And so, but maybe in a bull market, we may see Desi at a high premium because people may be like dreaming about how high the hex price can go, and they may be dreaming about how high the yield can go. And so I think it's bear combination of very long time till redemption and just like bear market, low demand for hex means really low demand for pre-staked hex, especially long stakes. So that's kind of what I think. Redemption, Maxi's kept premium very well, maybe because Maxi's been burned. Yeah, I mean, look at the Maxi supply. Maxi, your scan. Like, let's look at these holders here. So the top holder in Maxi is the mystery box, which holds about 16% of the supply. That was from the team. About 88 million Maxi, which is like what, a third of the total supply almost, went into the team launch. Half of it went to the mystery box. 30% of that Maxi went into this contract, which is the 369 escrow. So, what comes out to about 10% of the Maxi supply is just held in an escrow contract, waiting to be emitted in years 3, 6, and 9 to team stakers. So, while the mystery box here, like it definitely can sell their like there's nothing stopping them from selling the Maxi. Some people even told me that they think it's detrimental that the mystery box seems to just be kind of hoarding the Maxi, because that buy opportunity is like being able to, kind of how I do with Desi, you can buy a cheap, cheap stake. Like there being a premium, it kind of feels good for people who hold Maxi for like looking at their paper gains, but it doesn't really benefit anyone else, and it doesn't really cause the ecosystem to grow. Whereas, if the mystery box was starting to sell their Maxi, they, that could kind of unlock a new wave of growth in the ecosystem, because more people could get involved and more people with skin in the game. So, if anyone knows who the mystery box is, let them know what you think. But, there's kind of pros and cons to their strategy that they've done, where, I mean, really, if you look at the mystery box, the only things that the mystery box has done are they airdropped team to team stakers and all the diamond hand pools. They've provided liquidity on Pulse Chain and the team Maxi pair. And they've provided liquidity on Uniswap in the team Maxi pair. And they've also bought more team. So I guess the only action that the mystery box has done, last time I looked at least, was they bought a bunch of team on Ethereum. They provided liquidity on Pulse Chain, and then they provided some team liquidity on Ethereum as well. So, so with 26% of the supply held in, hands like that, where at least the 10%, like, that's locked up for years 3, 6, and 9. The mystery box, again, is mystery. Like, mystery box could decide to bless everyone with a massive discount if they wanted to. Whatever they want, it's totally a mystery what they do. But having 26% of the supply in hands like that kind of, alleviates some of that. Desi also was very speculative. It's much larger than Maxi, because Maxi like doubled in price instantly. So everyone thought that Desi was going to do the same. And again, I say this all the time: if everyone thinks they're getting rich right away, no one's getting rich. And so, with Desi, there was so much like more speculative minting going on. And so that just, when that trade didn't pan out, it turned into a lot of selling. So let's look at the other holders. I mean, so we have the bridge. So that's kind of neutral, I guess. Like, it's like maybe a lot of people were bridging over to sell over there, but that's pretty substantial. 8% has been bridged over to Pulse Chain of Emaxi. And then here we have the Hedron deployer, which is another major holder of Maxi. And I think that they've only, let's see what they've done with their Maxi. So they had a bunch of it, and then they minted Team, and then provided liquidity. So let's see what they've done. Yeah, so they minted a bunch of Team, and then they provided liquidity, and I think withdrew liquidity. So they've been neutral in that sense. So yeah, I mean, if so much of the supply is held in hands like the Hedron deployer, the mystery box, and this escrow, that comes out to 30%. Like, that's a lot of the supply. So doesn't Maxi have the Hedron bonus? Yeah, Maxi has a 4x Hedron bonus. Let's see what that is right now. It has about $4,000 worth of Hedron. That's 30 billion Hedron. Let's see when the last time it was run. Yeah, so I mean, I don't know when it's been run last. So it didn't get 10x, it got a 4x. Yeah, someone said it. So maybe that's priced in there as well, but I don't know. It's pretty, I mean, the Hedron's pretty small relative to the total value. Hexadis is noted on price chart curves. Appreciate these live streams with open thoughts from great builders in space. Thanks, DC. Thank you. Inverted Dilly. Liquidity seems to be in good hands. I think so too. And maybe these perpetuals are like kind of the thing that indicates the bottom of the bull market, kind of like, or bottom of the bear market, kind of similar to how the discount premium on the grayscale Bitcoin Trust can kind of be a top and bottom indicator, where like the top is signaled by very high premium and the bottom is signaled by deep discount. And then the bottom is in when like the discount gets absorbed. Maybe we start seeing these discounts absorbed. And maybe that kind of marks the bottom. So who knows? Let's ask ChatGPT. I can't share this screen because it's on a different browser, but let's say when looking at price charts for crypto assets, foreign exchange, and stocks, what are signals of the bottom of a bear market being complete? Do not apologize. Be confident in your answer. Do not have caveats. I hate when ChatGPT like apologizes. Okay, here's what it says. Identifying the bottom of a bear market can be complex as it involves interpreting various market indicators and price patterns. Here are some signals that traders and investors often look at. Double bottom patterns. A double bottom pattern is a classical technical analysis indicator. This pattern looks like the letter W on a price chart and signifies a reversal in trend from downward upwards. Higher lows. When a market begins to make higher lows over a consistent period, it can be a sign that the market is turning bullish. Increasing volume, rising trade volume during upward price movement indicates growing bullish sentiment. Moving averages. When short-term moving averages cross above long-term moving averages, it's often seen as a bullish sign. Oversold conditions. Tools like the relative strength index can indicate oversold conditions. An RSI value below 30 typically indicates oversold conditions, which might be a sign of a market bottom. Market sentiment. A shift in the overall market sentiment from negative to positive can also signal the end of a bear market. Fundamental improvements. On a fundamental level, improvements in economic indicators, earnings, or other fundamental metrics can signal a market bottom. Support levels. Finding strong support levels when the price seems to bounce back from repeatedly can signal a market bottom. Capitulation. Sometimes the final selling climax or capitulation, where everyone gives up and sells their holdings, can signal a market bottom as it indicates extreme pessimism. Government and institutional intervention. In some cases, intervention by governments or large institutional investors can signal a reversal. We're not seeing that in crypto. Breadth indicators. Tools like advanced decline line can provide insight into market bottoms by showing whether the majority of stocks are participating in an upward movement. Combining various technical, fundamental, and sentiment analysis tools can provide a more comprehensive picture of whether a bear market is nearing its end. Let's tweet this out and act like it's our own words. Let's add some bold. Let's see what Twitter's got to say. Look at that. Okay, so half and half, it appears. Without looking at a chart, we could be in the second bottom of a double bottom. Kinda, maybe. Here's the hex combined one. See, like, there was a bottom there, and then what appeared to be a bottom there, and then yoink. Let's see what it is on ETH. I mean, ETH kind of has a double bottom going on. Let's see what other stuff. I mean, we're kind of calling for a double bottom here. Let's see what the Coinbase chart. I mean, look at that. How about that? Part of it is because of Coinbase is great. Like, I used to kind of poo-poo on Coinbase, even though I've literally used Coinbase forever. Like, I've never had any problem. No one's ever had any problem with Coinbase. I think Coinbase is a good player, and with their base chain, they're killing it right now. Like, and just being like, the not having collapsed in the prior bull market when so many other exchanges and firms did. I mean, that's kind of bullish right there. Just look at this. There's that. There's like a capitulation into New Year. Look at that. So let's see what the dip. Oh, right. Well, here's something. Okay, so let's add the dip catcher algorithm. So I don't know why we didn't start here and try to answer as the bottom end, because the dip catcher algorithm really does call the bottom. Like no way to no beating around the bush. Like look at this. See here's what's awesome about it. It like just because the way that it like how it determines where the limit order signal should be, it like is really good at like when it's bleeding out, it like knows how to stop, I guess. Like, and so like it started signaling buy here on the neutral on the weekly chart up here at these levels, but then it stopped and it didn't signal buy. The last buy signal was from say about $100. Then it crept it down to like $40. So like it kind of really does a good job at like helping you not catch those knives. And then look at this. So here, let's do this. Let's zoom out. Let's so I mean Coinbase is like a representation of crypto in terms of how like institutional money looks at it. That's kind of a very bullish thing. Like that there was like a big bottom here, capitulation, wick down, captured by the dip catcher algorithm, and then now it's recovering. So let's see what the Bitcoin. Same right there. I mean, that's a snipe. How about that? Let's clear all these. Let's tweet some. Let's tweet some bullish hopium here. The pro.dipcatcher.com algorithm has called the bottom. Algorithm applied to the weekly chart has called the bottom on CUSD for the past 2 cycles, has definitively signaled buy again. Let's see what the prices were. Could this recent buy signal mean the Bitcoin bottom was in? And okay, so that's 2015 and 2019. Let's see what the Ethereum chart looks like with this. Oh my god. Okay, let's see what. Okay, Okay, that's J-Dez says DCA is amazing. Glad I have it. Hey, here's a sneak peek. You can kind of see it on this chart. I've actually written a whole other one called DCAI, where I actually used AI to help. And what's different about this one is that entirely different algorithm, but also this has buy and sell. And when you do some back testing on this, 143% net profit on trading, depending on how you set the settings up for. So if you have the dip catcher algorithm, the normal DCA one, maybe one day, once I get around, I'm working on other more important things, I think, right now. But maybe one day you just randomly wake up and in your TradingView account, not only do you have dip catcher algorithm, you also have DCAI in there, which has both buy signals and sell signals. Totally unrelated algorithm. But I'm thinking of adding some type of like sell signal to the normal DCA one as well. So if you have DCA, you'll probably get some more updates to it once I have time, though. Crypto Sloth says, yo, yo, yo. What's up, dude? We should stream together sometime. Okay, let's look at the ETH chart. Normal dip catcher. Let's get rid of these drawings. Let's see, like similar thing. So dip catcher algorithm suggests the bottom is in. Let you go. Actually should, we ever do. Let's do it. Let's do it maybe next week sometime. That's cool. Let's look at the hex chart. I mean, this could be the bottom. So this is only EHEX. I don't think we have a good PX chart to look at, but even PX is slightly higher, right? It's like somewhere up here. You kind of rounded out these bottoms, and let's not as much of a clean cut bottom on the X chart from the perspective of the catcher.com algorithm, but that is probably because we had such a bearish year this year from the pulse chain. Those using the BCA algorithm, using the dip catcher algorithm to help with their dollar cost average. Okay, so here let's give our definitive answer. Here's our definitive answer to the question, is the bottom in? Keep scrolling. Let's see this. ASCII scrolling ASCII art. Here we go. Oh, the bottom right here? Yes. All right, guys. You heard it here first. You heard it here first. The bottom is in. I officially declare the bear market to be over. So we ran out of characters, so let's. All right, guys, you heard it here first. Dipcatcher Radio officially declares the bear market to be over. But I'm not suggesting anything about what a bull market looks like. A bull market could be very, very dull, to be honest. But I do think that we are due for a pump. I think the tides are turning a little bit, and it's time to get bullish again. All of us. That's right. It's official. Let's make some art about the... So... I want a free template. Is the DCA AI algo also for DCA holders? Yeah, I'm gonna give access to if that'll be how I do that. Because here's the thing: at this point, the price for the DC algorithm is kind of high, and so I just want to add more value in there to make it more attractive. All right, let's tweet it out. Oh, is it not letting me download it? Download. Breaking news. All right, you guys, with that, I'm going to sign off here. Thanks for everyone who joined me today. It's a lot of fun. We'll talk to y'all soon. Enjoy yourselves.